it says. Sorry. Yeah, I do. I see both of us. You want to tell me if it's working? Hi, can you? All right. Sorry for the technical difficulties. I guess we're live right now. It says we have 6 viewers, so that's good. Hi, John. Welcome. Sorry about the.
No problem. Thank you for having me, Anil. Looking forward to doing the best we can to answer some questions.
Yeah, hopefully we'll get some. Well, the viewers are going down. Whatever. Hope maybe we'll give it a few minutes, but
Maybe we start giving, just mentioning some
I
topics.
just want to. Yeah, I am assuming we're all good. Maria, are we good? Maria, can you hear us and see us? We're good? Okay. All right, cool. So, thank you, Arlene. So, obviously we're here today to discuss taxes related to cryptos and NFTs, a very hot topic. We're already in the middle of tax season, and it's come up a bunch of times for us here at Tanton Grubman. And fortunately, I always follow John on social media, and he pointed out a couple weeks ago that the IRS added cryptocurrencies to its voluntary disclosure program, which kind of got me going in terms of setting. I wanted to do something like this anyway, and then when I saw John post that, I was like, great, now we have even more of a reason to do something like an event like this and really get the word out there that both John and I are staying on top of the current trends and latest developments with the IRS, and it's obviously going to be an evolving topic. It's still so new, but you just have to, there are still some gray areas, but we just have to do the best we can. And if you're not super confident what you're doing yourself, then definitely reach out to a qualified tax accountant or CPA and let them take care of it for you. So I know we have a bunch of notes we want to go through and get to. I don't see any questions yet, John. I don't know if anything else you want to say before I kind of go down the list of topics that I sent you.
Sure. Well, first, thanks for having me. This is a topic that I know you and I have, talked about a lot. It's there's a lot of people that, own virtual currencies, NFTs, and are just unaware of what to do in terms of taxes, and the rules have changed and are changing, and there's some new programs out there. So definitely it's something that people, hopefully we can touch on some of these topics and give some people some good information today.
Okay, great. So I'm just going to start kind of going down. I made some notes, and I figured there may not be like questions right away. Maybe we have to spark a little more interest. And obviously, even if there are no questions, we still want to inform people of. We don't want to get too technical, but like the general things that have come up, the general rules, things like that. I'm not going to start with what cryptocurrency is. I'm going to bypass that. If you want to know that, I'm happy to do a one-on-one meeting or consult with you. But I'm going to start with how is virtual currency treated for federal income tax purposes. So virtual currency is treated as property, and general tax principles applicable to property transactions apply to transactions using virtual currency. Now, I'm going to go right into it. That doesn't mean that it doesn't just the fact that cryptos and virtual currencies are treated as property for IRS standards doesn't mean they're treated like real estate or commercial real estate. There's a very common tax loophole called the 1031 exchange. Obviously, John and I are very familiar with that. It may be the first year or two crypto was out, people were able to get away with that, but IRS was very quick to say that this whole 1031 like-kind exchange loophole is not applicable to cryptos. So if you take Bitcoin and buy some Ether, take Dogecoin and buy some Bitcoin, if you take a currency and exchange it for another currency, doesn't matter what for what, it is a taxable transaction. If it's a gain, if it's a loss, obviously you could take the loss, but it's a realized transaction, and there's no tax deferral or tax-free treatment when you do one crypto for the other at all. So that's that's very important to note. And I think there's still some people who think that they don't have to report certain transactions or don't report cryptos, and that's not true at all. Next, I'll go into how do you determine your cost basis when calculating your gain or loss. How do you do that? Basically, your cost basis is the amount you spend to acquire the virtual currency, including fees, commissions, and other acquisition costs in US dollars. Because still, when you do a tax return, there's only US dollars on there. Obviously, if you have some foreign currency transactions, you have to convert them to US dollars. Same thing with crypto. You need to convert it to the fair market value into US dollars at the date and time of transaction. And that's how you report on the tax. That's how you report not only your basis, but also your proceeds on the tax return. So, John, you have the notes. I don't know if you want to go back and forth. How you want
Well,
to
I just want to add one thing that's
Sure.
I think is important is that just because you did not get a 1099 from your crypto or virtual currency transactions, as you said, you still may have a taxable transaction by exchanging it. So, and if you bought a virtual currency, you have to make sure you let your tax preparer professional know, because it's a question on the return. And again, a lot of people, are used to getting 1099s for stock transactions, but just because you didn't get a 1099 for your virtual currency transactions doesn't mean you don't have a taxable event.
Right. Exactly. Right. And just like how if you don't get a 1099 for a service performed, whether it's under $600 or not, all right, you're laughing because you hear all the time. Oh, but I didn't get a 1099. It was $600. But as we know, all income is reportable. It's not always taxable, but it's all reportable, and usually it's taxable, right? So, yeah, all those people who think that just because you didn't get a 1099 doesn't mean that it's it's not reportable, and not declaring income can be considered a felony most of the time, right? So, always important to point that out. So next, just going again, I don't want to get too technical, but touching a little more on cost basis. Do you use LIFO, FIFO, specific identification weighted average? So LIFO is last in, first out, and that's usually the way to do it. So, if you buy Bitcoin 5 different times and then sell it a little later, sell part of it a little later, generally you should go off the cost basis of the earliest purchase, more or less. That's what LIFO means, last in, first out. If you are allowed to use specific identification, as long as you can, which means like, if again, you buy 5 different times, you sell part of it after those 5 times, you generally want to take the higher cost basis to lower your gain or show a loss. So especially the way crypto has been the last year or two with the prices. So as long as you can like back up and identify, okay, I'm selling the Bitcoin that I bought on this date. As long as you can explain that, you can get away with what's called specific identification, which can significantly lower your gain or create a loss, right? So again, this is where it gets a little technical, not too different than stock transactions, but and if you can't, again, this is a reason to work with a qualified CPA or tax accountant so that you can, significantly lower your liability or get a refund. Why pay unnecessary capital gains tax on something you don't have to just by using specific identification instead of LIFO? Anything on that, John?
Yeah, it's a great point. So you want to strategize and you want to do, plan so that you are getting the, best cost basis for you. And so, talking with a qualified professional like Anil, you'll get the best, cost basis. And a lot of people sometimes, don't pay attention to that. They don't realize that they have these options.
Thank you. Here's this. You brought this up, John. You said this was going to be the hot topic, right? If an employer or vendor pays wages or bills in virtual currency, how is it reported? Do you want to take this one?
Sure. So you have to. It should be included in your W-2, and or if you are a contractor, that amount goes in your 1099, and then you could have when you take that currency and then transfer it to another currency or cash, you have another taxable transaction. So getting paid in cryptocurrency, you could have multiple taxable transactions.
And then, of course, just like anything else, if it's a 1099 whether you get the 1099 or not, if it's a self-employed thing, there is self-employment tax, right? FICA,
Absolutely,
Medicare,
yes.
right? We can't forget about the good old
Yeah,
self-employment tax, right?
right. And that's the thing. So you could have get paid in cryptocurrency, and you have ordinary income tax, self-employment tax, and then a capital gains tax all in one. A 3-for-1 special.
Have you had any S corps receive crypto as payment?
So we had one. We actually have one person this year that received and we're working on. They have not transferred it yet, but they did receive some consulting fees in cryptocurrency.
On
How
an
about
S corp?
yourself? Yeah.
Right. So I guess it's, I mean, as basically the same reason, the best, I guess, way to use S corps in terms of avoiding self-employment tax. I assume that you basically just converted the crypto and then still paid a reasonable salary, like we all like to say, right? I mean, it's not, I guess once you convert it, and then the S corp treatment's not that different, right?
So it comes in as you know, on the revenue side, and
Right.
then you still have to take your reasonable salary, and all those rules still apply.
Right.
So it's tricky
One of my
because
favorite topics, the reasonable salary on an S corp. We love talking about that, right?
we could go on that for a long time, but
Yeah.
yeah, I mean, I think the most important thing to remember is that getting paid, even whether it's business, personal, it's a reportable transaction, and and then if you're buying, I think, and this is something I know that's later on the list, if you're then using that virtual currency to buy business expenses, to pay for business expenses or pay other contractors. All of these could be taxable transactions, and then you may need to issue 1099s for giving people virtual currency as
Right.
well.
Look, one day we might all have to do this. I mean, personally, I haven't been paid in crypto yet, but if I was, I'm pretty sure I would convert it right away, and then pay everyone else, right? Because I don't want to deal with all the accounting, and even I don't want to deal with it. I'm sure you wouldn't either. But hey, at some point, it's not so crazy, whether it's 1, 2, 3 years, 5 years. We might be us just as accountants, professional services, lawyers, who knows, are going to be doing all or part of our transactions in other currencies. I guess it's not that crazy a concept, right? Which I guess is why we're here today. But
yeah, I mean, more and more people, it seems, are getting comfortable with it. I mean, I'm sure you walk around New York City, and there are restaurants that are accepting it. There are consultants accepting it, and so it seems like it's going to be a way, part of our life and part of business transactions going forward. So it's an important thing for people to be aware of.
So moving on. I mean, I think you touched on it. What tax forms are most commonly used in the reporting of virtual currency transactions? So I think the first one that comes to my mind as an accountant is 8949, which I know is not a household term, but it doesn't really need to be, right? But 8949, Schedule C, of course, Schedule C if it's a single member LLC or sole proprietor. But again, just like we talked about, if you're an S corp, C corp, partnership, you're reporting this revenue just like as you were if you were paid in dollars, right? And then, well, the only other thing, I guess, form that I made a note of is if you do these, I don't know too much about forks and airdrops. I don't know how much you know, John, but if you have income from forks and airdrops, which we'll define. Actually, I'll define them now since I have that on my notes. So a fork is a blockchain split resulting in 2 separate blockchains, and an airdrop is marketing distribution of a token or coin. So I know when people say an NFT is dropping today or dropping at 6:30, I know that, like, my brother told me about some site he's on that every 6:30 p.m. every day they drop new NFTs. So anyway, when it comes to currency received for things like forks, airdrops, there's even things as mining or staking. I mean, you definitely want to report the income, but maybe on Schedule 1 is other income, depending on what it is, right? I don't know if you've dealt with any of that stuff in your practice yet.
No, no, not as much, but something we're trying to stay aware of. But I think it's it's just really important to get all your documentation and make sure that whenever something moves or changes, be aware that it could have a different tax implication, you know?
Right. And yeah, and if unless it's a gift or a loan, if it's
Yeah.
any type of income, whether it is again for any of these different, NFT sales, crypto exchanges or sales, forking, mining, staking, airdropping, it's good. If it's income, it's going to go on your tax return,
Yeah.
right? That's the main thing you need to keep in mind. It's
Right.
if you don't know how to put it on there, that's when you call someone like John or myself. But if you just don't put it on there at all, you're probably going to have an issue, right? And it's not going to be pretty. And just to define, right, mining is creating blocks by validating transactions. Basically, mining is I know popular with Bitcoin. People are still mining Bitcoins because the maximum quantity of Bitcoins, which I think is somewhere around 20, it's either 19 or 21 million where it hits the cap. We haven't reached that cap yet. So people are still making money off mining Bitcoin. And staking is committed. Well, technically, staking says committing coins to proof of a stake network. Staking, in a way, I think is earning interest or dividends on your current holdings of crypto, right? I think does that make sense?
Yes,
So,
that's my interpretation.
right. Yeah, I've dabbled a little bit crypto, but haven't gone into, I don't know if I'll ever become mining, but I haven't gone in staking. Let's see. I know one of my buddies has been staking, but he has a little more time than me. So I don't know if I want to get into that right now.
After tax. Yeah.
But so speaking about gifts, sorry, we're gonna say something?
No, I said after tax season for you.
Right, maybe. Let's see. Yeah. So now again, so we went through the whole income reporting, right? If it's income, no matter how it's received, report it. If you receive it as a gift, which I guess again is not such a crazy concept anymore in terms of receiving crypto as a gift. Do you have income? No, just like if you were to receive, if I give John a gift of $10,000, or if I give John a gift of 10,000 Ethereum, it's not income to him because it's a gift. Do I have to file a gift tax return? Well, if it's under $15,000, I don't. 10,000 Ether, or even 10 Ether for that matter, would be more than 15,000. So I would have to report a gift tax return on that kind of gift. But John, either way, John does not have to recognize income because it's a gift. Your basis in the gift, I guess I don't want to get too. I think I'm gonna like stop. I mean, I don't know how much you want. You want to? Should we talk about basis and gifts now? Or
Well, I'll just say one thing, just one thing on that is that it's quick is that just like any gift, so if you're giving a gift that has appreciated, you may need to do a valuation or provide, it may not be what you bought it at. So, it could be, it's not just a straightforward thing. You may have a capital gain on the appreciation. And so you need to be aware of what your cost basis is and what the fair market value at time of gift is.
Right, that's a great point. When you're giving gifts in dollars or even other foreign countries that matter, it's easier to maybe think about, oh, it's under 15,000 or whatever, it's not a big deal. But with crypto and other types of gifts, you want to make sure that your value, or look, you want to make sure what your value is so you know if you have to file a gift tax return or not, right?
Yeah.
That makes sense, yeah. But okay, I think yeah. So those were like the main points when it comes to cryptos. I think now, I guess just to go over some like main principles, like we said, just to recap, virtual currency is treated as property, usually, most of the time. Virtual currency is not foreign currency, so no foreign currency exclusion. Virtual currency is self-employment income and receipt for services, valued fair market value at the date of time and receipt. It's self-employment income when mined, valued again, fair market value, date of time and receipt. Virtual currency is treated as wages paid by employer. Again, same kind of valuing. I don't want to keep repeating it. Virtual currency is subject to all information reporting, withholding 1099s. So if I hire John to prepare a tax return for me as an independent contractor, I issue John a 1099, I pay him in crypto. I got to convert the value of that crypto to US dollars and send John a 1099 for that dollar value. So if I pay John 1 Ether today and Ether's 2,700 bucks today. Next, at the end of the year, and next January, I have to issue a 1099 to John for 2,700 bucks to make sure that he picks up the income accordingly. There's a gain or loss created whenever anything's exchanged, like we said in the beginning. Forks and airdrops are generally ordinary income, valued fair market value, date of time of receipt. Fees are always added to cost basis. So just whether you're selling, Dogecoin on Coinbase, and Coinbase charges you a fee that's added to your basis. Whether you're selling a piece of real estate, your closing costs added to your basis, same kind of concept there. Fees are transaction fees, closing cost fees are always added to your basis. They reduce your gain or increase your loss. Blockchain Explorer may determine fair market value, and Blockchain Explorer is something that it's an online tool used by investors. Charitable contribution equals contribution of property. So donating a Bitcoin, you value it in dollars, same thing as donating actual cash. And inventory methods, FIFO or specific identification, very important to, and you can, again, like John said, also, you can really use specific identification to maybe lower your gain or increase your loss. So those are like kind of the 12 tax principles of virtual currency. We gave you some definitions. Before we go into, I guess, NFT. Before we go into NFTs and before I go into trackers, anything else you want to point out, John? Just so you know what we're going to next, I have the list of conversion platforms for 89.49. We can go down the list, and then eventually we'll go into at least maybe a more interesting topic of NFTs. But before we do that,
I think that's great. Let's keep going.
So I mean, look, I have this list here. I'll read it carefully, and we could always send it out or post it on our websites and our social media of all these. So basically, look, I know with Coinbase, because I personally use Coinbase, and I've done this now a few years now, you just export into an Excel sheet the list of transactions. It's very similar to the 1099 that brokerage firms issue for stock transactions. So if it's just Coinbase that you're doing your sales and exchanges on, it shouldn't be that hard to get a report that you either use to do your taxes or give to your accountant or whatever. I haven't used anything personally beyond Coinbase. I know that most other exchanges and wallets don't make it as easy because they don't have to, they're not required to, so they're not really dealing with it yet. Any particular exchanges or wallets you've come across, or any trackers you recommend?
It's important that if you have that using a software to get that at 89.49. So I found that most people, depending on, there's a lot of foreign exchanges where they're not providing a lot of information, and there are some software providers that you can link to that will do the 89.40, that will give you an 89.49.
Okay. So you mean beyond the list of trackers those different than the trackers, what you're saying, right?
Would the tracker produce the 89.49? I'm sorry.
Yeah. So this list of trackers, I said, yeah, like I was just curious. I think I'm looking at the list of trackers now that I sent you. Like, I know that two of them I've seen more than the others, which is cointracker.io and zenledger.io. Are the ones, at least from my end so far, I've seen most popular. There's changele.com, bear.tax, cointracking.com, cryptotax.com, cryptotrader.pro, coinly.io, taxbit.com, and tokentax.co. So there's probably another at least 10 or 20, who knows, maybe there's 100. But yeah, zenledger.io is the one I've heard the most about.
I've found that CoinTracker has been the best for us to use.
Cointracker.io?
Yeah.
Okay. Yeah, so look, I mean, the main thing is getting into the right format. If it's an Excel sheet, great. If it's an 8949, even better. But the bottom line is, like, when it comes to stock reporting, I think it's now almost been since 2011 where the IRS made the broker, right? At least covered, non-covered transactions, all that stuff. So when it comes to stock reporting, it's really fairly straightforward and simple. But the IRS probably isn't going to be that laid back on crypto reporting because it's such a new concept, and there's they haven't really laid out the requirements to the exchanges and the wallets. And the IRS probably doesn't even know all the exchange wallets that exist. So because of that uncertainty, they're going to really keep an eye on it. And you want to make sure your reporting is very buttoned up so you don't really raise any flags on your tax return, right?
Absolutely.
Okay, great. So again, if you have any, questions on this, please reach out and it's just important to get everything as organized and transparent as possible, right? Do you want to, so I guess, sorry, I forgot one more thing before we get into NFTs is of course the voluntary disclosure program. So do you want to lead off with that, John?
Sure. So yeah, this is something that's new that just came out a few weeks ago, and I think is very important. So there's a lot of people that have had virtual currency income and transactions the past several years, maybe even going back, 10 years for some people now, and haven't reported those gains to the IRS. And the IRS, it can technically be considered criminal for not reporting income. It can be considered evading. Like if you bought cryptocurrency, it went up a lot, you exchanged it for something else, you used it to buy a car, a house, and never reported those gains to the IRS, it can be considered criminal. The IRS has something called the Voluntary Disclosure Program, which was previously mainly focused on foreign banks, where now they're allowing you to go back and report your cryptocurrency transactions. And what's happening is you can avoid, sorry, there's a car alarm behind that. You can go and report these transactions before the IRS reaches out to you. So there's no criminal charges and no fraud penalties. Okay, so you just amend the returns or file any returns that are unfiled, and do the proper disclosure, and you can avoid significant penalties. And the most important thing is you can make sure you avoid jail, because I think the IRS is not going to be, they're going to be looking to make example of people that have been, living the high life off of their cryptocurrency gains.
Yeah, I like the avoiding jail. I mean, you always have those random, whether they're clients or people you just meet out, right? Anywhere, like no one wants to go to jail, right? That's probably one of the biggest fears in people, right? So, and the truth is there's a lot more chance of going to jail when it comes to not reporting a foreign bank account, foreign asset, maybe now crypto assets. A lot more chance of going to jail for that than not filing or paying your taxes. So, I mean, you could definitely still go to jail for not reporting income or filing taxes, but there's probably more of a chance with stuff like this, right?
Right, absolutely. I think, the IRS, in terms of regular income tax reporting, I mean, people forget to leave stuff off or didn't file for different reasons, but I think the IRS, and they've sort of mentioned this, they look as people that have switched assets to cryptocurrency and not reporting it as evasion. They're saying people are doing that because they don't want that, they're potentially looking to hide assets. So that is how the IRS views it. So, I think I know that's a focus of the IRS now, is looking for people that have, hid assets in cryptocurrency, and they've done some, they've found some, wallets that they've taken. They've done some other things. They've had some major criminal cases where they found the people through cryptocurrency. So it's a huge focus of the IRS right now.
So let me ask you a question, because I know it's such a new thing that it's not even on the IRS website yet, right? It's not even like, it's literally 2 weeks old today. I think it was Feb 15th. But have you come across, I know obviously there's the reporting of the sales of exchanges of crypto, and then there's just reporting your crypto balance. Now, if you're an exchange, Coinbase is obviously US based. So you're not required to report your Coinbase balance.
Right. It's not. So if you bought cryptocurrency and never did anything with it, you bought one token or one coin, and it's been sitting there and you haven't exchanged it or used it for anything, that's not an issue. It's if you bought something, exchanged it, traded it, cashed it out, etc. Any transaction. So if you've been using the funds from it.
That's what they've added. So they're not, when they say they've added it to voluntary disclosure, they're not necessarily saying report the balances unless it's somehow foreign. They're
Right,
saying report
right.
the transactions, right? Okay.
Right, they want you to report the income, the income.
Right.
You know, it's a little different because the foreign, you know, the foreign bank disclosure was a lot of times people just having money there that weren't, you know, there wasn't as much taxable income, which is that's the major difference of this, I think, and it's a great point you brought up. You know, a lot of times with the foreign bank program, people had assets that it wasn't taxable income, it just wasn't being disclosed that they had these assets. Here, it's more likely it's not having disclosed income.
Right. Got it. Okay. I just wanted to clarify that. Yeah, it's a little different, but at the end of the day, yeah, I mean, like they're going after income, right? But they're also going after potential all that stuff, anti-terrorism, anti-money laundering, homeland security issues, all that. They want to just try to track the flow of funds, which keeps us all safe. So why not, right? So so cool. So I think we've spoken now almost half an hour or more about crypto. So we'll oh, by the way, going back to the voluntary disclosure, definitely reach out to John or I if it's never too late, right? It's better late than never. So if you need help with that, we both have extensive experience helping people get through the voluntary disclosure program. So please reach out anytime with questions about that. I think, John, you have an attorney who works for you. So that attorney has attorney-client privilege, obviously.
Yes.
Right. So that's an advantage you have. We consulting with us, we would either, again, refer you to John, or we'd bring an attorney to work with us if we need to. You know what I mean? But a lot of times depending on what's being disclosed, you don't always need an attorney for these cases. It depends. But if we feel one's appropriate, we will bring one in, So now going into NFTs. So like I said, I didn't want to start with what is crypto, what is virtual, stuff like that, because I think we were a little beyond that and we didn't want to get too much caught up in the details, but I will start with what is an NFT. One of our managing partner at our firm, Rob Grubman, one of his friends, his name is Mark Beckman, just wrote a book, just came out recently, and it was very interesting and helpful. That's the book. So if you're looking for a basic understanding of NFTs, highly recommend the book. NFT stands for non-fungible token, so which is basically a fancy term for a unique digital asset that's verified by blockchain technology. NFT may be a JPEG, an MP4, or even a GIF file. Each NFT comes with unique IDs and a verified transaction history that shows who minted it, who created it, and who has previously owned it. It's kind of like going to what's that website for cars where you want to check the history? One of the Carfax, right? The built-in Carfax. In 2021, NFTs started coming into prominence both as a way for creators to get fair compensation for their work, an exciting new type of investment asset. And last March, an NFT artwork by the artist called Beeple sold for a stunning $69 million. I think it was one of the famous big auction houses sold it for $69 million, just a digital piece of art. So I think, look, so NFTs, so generally they're most related to art right now, digital art, but I know that they're being kind of cross-sold or cross-developed, cross-minted for many different things. For example, there's this thing called Flyfish, and it is Gary Vaynerchuk and two other people have created this NFT where they're going to build a high-end sushi omakase restaurant in New York City, and the only way you're going to be able to eat at this restaurant is if you own one of their NFTs, and there's things related to the NBA, the NFL, music related. So it's definitely going way beyond art very fast. Usually, even if there is something beyond art, there is a little piece of art or a little image on it, but it's gonna go beyond the art world super fast. That's for sure. So if you're minting your own NFTs by any chance, you are, again, anything you receive from minting those NFTs, income, self-employed income to yourself, your corp, your LLC. You can, of course, deduct expenses related to developing the NFT, mining it, minting it, selling it. All those expenses are ordinary, necessary for business. You can deduct them against that income. Tax rate on NFTs. Little not as straightforward as crypto in a way. So John, do you want to take that or you want me to keep going?
Keep going, keep going.
Tax rate on NFTs, okay. So what makes the tax rate on NFTs a little more complex than crypto? Cryptos are generally always going on 8949 Schedule D. An NFT, because it could be defined as a collectible, and the IRS defines collectible as any work of art, any rug or antique, any metal or gem, any stamp or coin, any alcoholic beverage. That's funny. I didn't realize that one until I read it. Or any other tangible personal property the IRS determines a collectible. So if your NFT is just a pure piece of art or some other kind of collectible, it's subject to a higher rate, which could be end up 31+%. It's the rate for collectibles is 28%, but then of course we all got that 3.8% Obamacare tax that's been in effect on any investment income over a certain amount for many years now. So really you're at 31.8%, really, when you got the 28 plus the 3.8%. That's right. So it could be with crypto, just like with stocks and real estate, crypto, you got long-term or short-term. Here you've got the collectible rate aspect of it as well. So that's really just a general thing on NFTs. I mean, and that's really the difference, the main difference between, selling NFTs, selling or exchanging NFTs as opposed to selling or exchanging crypto. That whole collectible 28+% aspect of it.
One thing to add, there are different rules in terms of deducting expenses when something's a collectible versus non-collectible. So it's just something to be aware of. In terms of keeping track of your expenses related to the NFT.
Right. I mean, it's not as straightforward as deducting like regular, ordinary, necessary business expenses. But that's just saying for the people who collect it. For the people who actually mint it or mine it or create it, they probably get the usual treatment.
Because that's a big yes. That's a business, yes.
Right. If you're in the business of making it, it's different than if you're in the business of just selling or exchanging it. Right. Good point. Yeah. Another thing, right? So if you've sold or exchanged NFTs and you feel like you have expenses relating to the sales of exchange of NFTs, that's really when you reach out to a professional to handle stuff like that. You don't want to mess around and start deducting expenses you're not really allowed to deduct, and then leading to a bigger mess or audit later. So that's pretty much a rundown. Again, not getting too technical. It's an evolving situation, and you just want to stay ahead of it, like anything else with taxes or accounting. So before, I guess we'll, John, anything else to add, or you just want to let?
Yeah, happy to answer questions and reach out to us. See if we can help out.
Oh, here we go. So we do have some questions. Okay. I don't think okay. So let's see. Oh, I guess so hi, I acquired some Bitcoin in the very early days, 2013. What is the best way to determine or estimate cost base for this transaction? So I guess to start a little bit of a conversation. I mean, if you don't have the exact basis, then you could just do whatever research is available online to try to figure out and estimate the cost base, whether it's looking up historical prices or, I mean, just like with stock prices, generally you can look up the price of Bitcoin at any point in time since it came out. Right? I don't know. Have you ever had to deal with any of these cases where have you had to deal with historical cost bases on cryptos at all?
No, but what I always tell people, same thing with stock, you can try to go back and get bank statements, look up historical prices. There should be some type of price, breakdown from back then, and do your best. And the best thing is if you can find a bank statement or something that shows the actual cash. Right,
exactly. Yeah, I mean, something's better than nothing, because obviously if there is nothing and there is an IRS or state auditor examination and you don't have any proof at all or any history at all, they could say the base is zero and then assess capital gains tax on the whole amount, which obviously isn't going to be fun to pay. So if there's anything you could back it up with, do the best you can. And like I tell people, generally whether they're putting their expenses together for a tax return, a lot of these back filings people haven't filed in many years, I'm sure I know you've dealt with that a lot, John, or whether it's putting or just getting together for an audit, just because you know, lost a receipt or don't have the exact number. If you have to estimate, estimating is better than nothing. As long as you have a reasonable basis for the estimate, go ahead and do it. You know, worst case, the auditor won't accept it. We'll deal with that at that point. But if it's a reasonable expense, you know, looking back at that date, time, that event, if there's revenue brought in, or if it's something reasonable, like a lot of auditors will allow reasonable estimates of expenses. There's a whole Cohen rule, things like that, right? So I don't know if you've.
Yeah, I mean, that's more business. I mean, that's more of a business related, the business audits. Like if you have a business and, you know, you're a plumber, you know, what are the expenses related to plumbing? So it's a little different than, I don't think you'd invoke the Cohen rule for, you know, finding the price of you know, of a crypto transaction. But yeah, you know, as you said, be reasonable. Something is better than nothing.
Yeah, because we were talking about like estimating cost basis, I kind of went on a tangent, went into like, you know, estimating, you know, business expenses, things like that.
Right.
You know, because I also like, you know, when I'm coaching someone through getting through back taxes, and they're like, oh well, I don't have anything. I'm like, well, okay, well, like I said, a lot of banks these days go 7 years back or whatever. Like, go back to your bank statements or emails, whatever papers you have. You know, sit down and just brainstorm and think, and whatever you can put together the numbers, put together a story, and then we'll work through it together. Again, we never want to put anything down there that's, you know, by any means, you know, made up or fraudulent or fake. No, but if so, again, something's better than nothing. And if there's a story behind it, a true story behind it, you know, sometimes it's reasonable. Like obviously you spent X amount on, you know, cabs, supplies, meals, whatever, to get this revenue and income, right? So just kind of touching on that for a minute. I think that's pretty much it. Not bad for the first time. I think there's been that question that was asked, someone responded to it, and there's been a little discussion created, so that's good. We're gonna hopefully just record it okay. Again, it was our first shot, and we'll definitely release the recording so everyone can watch it. And John, why don't you just, before we sign off, just tell everyone the best ways to get in touch with you.
Sure. You can reach out to me at our website, 201tax.com. You can call us at 201-479-2572. And you know, Neil, thank you so much for organizing this, and we should definitely do it another time. And if there's any other topics, you know, you'd like us to talk about, let us know. It'd be fun to do it on, you know, something else as well if necessary.
Yes, good point. Yeah, if there's any topics, please let us know. I know a couple hot topics I'm already thinking about, just to throw it out there. Section 1202 and FERPTA. Section 1202 and FERPTA, I think, are two topics that, whether we get to it during, maybe that's more for after tax season, but
Yeah.
I know two hot topics that are definitely out there and things that are important to talk about. So maybe we'll try to touch those next time. And by the way, compliments on 201tax.com. I like your thinking and your domain there. Your website. You must have got it from some very smart guy. Must have given you the idea for that domain. Yeah, I'm Anil Melwani, CPA. I'm a partner here at Tanton, Grubman CPAs in Manhattan. We're based in New York City, but we have clients all over the country, all over the world. So wherever you are, if you have a U.S. filing requirement or you think you have a U.S. filing requirement, please reach out. Our direct number here is 212-475-1040. It's 212-475-1040. And my direct email is amelwani@tgcpas.com. That's AMELWANI@tgcpas.com. Website is tgcpas.com. So you can find me, or if you just Google Anil Melwani CPA, usually there's plenty of pictures and videos of me, and more than enough of what you want to see of me in taxes. So please feel free to visit our YouTube channel, call us, email us, however you want to get in touch with us. Stop by the office. We're right in Midtown, East Manhattan, conveniently located. John is also not too far away across the river in Jersey. So, and again, whether you're in Jersey or New York, you reach out to either one of us. We're happy to help you out, answer your questions, discuss whatever you'd like to discuss about accounting or taxes. Thanks a lot, John. It was great. Great first time. I think we did okay, and I'll speak to you soon.
Take care, guys. Thank you.
Have a good week. Take care.